In this video, I'm going to be going over 3 bad habits to avoid when on your trading journey. So maybe you're doing it without realizing you're doing it, or maybe you're aware of it but not sure how to stop doing it and get out of that cycle and that loop. So I'll be going over it in this video, guys. Also, thank you everyone again for the support on the videos. Really appreciate it. If you do get value and you do like and want to support this journey, please like and subscribe. I'd 100% appreciate it. I really would. Comment. I love hearing from you guys, and we're probably, a lot of us are on the same journey and trying to help each other, so it'd be great to hear from you. I'll get back to you. But yeah, if you get value, please subscribe. We're trying to grow as best we can, and I appreciate that, guys. Thank you. The first bad habit I see traders make, and this isn't necessarily from beginner traders, this happens quite frequently. Traders that have been, I did it a lot as well, traders that have been doing it within, have been trading for like a year, 2 years. Like I said, I made this mistake a lot. And it's system swapping. So when you have a strategy that you know works, you've got the data, you've tested it, maybe you're in a community and traders are doing really well and you're struggling. What I see happen a lot, and it's really, really detrimental to your trading growth, is people look to change strategy too soon. So there's nothing wrong with making tweaks. There's nothing wrong with sometimes maybe your system doesn't suit your personality or suit your, just suit you in general. But the only time I would suggest changing or tweaking is when you're already consistent on that strategy. What I see too often is a lot of traders, they start having a losing period, they start having a few losses in a row, which is natural, probability occurs, and naturally you're going to take a few losses in a row. And instead of sticking with the strategy and keep executing the strategies to allow the edge that they've already tested and know works, to allow that to play out, they then look for like this shiny ball syndrome, or this they see someone on social media who trades a completely different strategy and may have just had loads of losses in a row, but they've made 5% today and the strategy looks amazing and there's nothing wrong with it. And people then, what they do is they look to change strategy or change a complete style, and then they start trading that, they start executing trades on that, and before you know it, they take a few losses on that, and then they're back. Oh no, I'm back to my original strategy. That works better. I know that works. Like, people start to keep changing and swapping, and I know I've been there. I did that. It's natural when you take a few losses. It's hard to think in probabilities, and when you have 3 or 4 losses in a row, sometimes it can be difficult, and you think, oh, maybe does this work, or maybe I'm not doing this right. Maybe it doesn't suit me. Maybe I should change my strategy and just try something new. We're trying to learn and evolve, but you shouldn't do that, especially early on. You should stick to your strategy. If you know it works and you know that people in your community are doing well, or people that you know on social media are successful, consistently profitable, if you're struggling, avoid the mistake of looking to change and look at different people's strategies and trying to swap and change your strategy, because all it's going to do is you're going to take a few losses. You're not going to allow the edge to play out on your strategy. Let's say you took 3, 4 losses in a row, you decide to change strategy. You're then not looking at the charts and at the system that you're meant to be trading. Let's say now you're looking at completely different currency pairs or to completely different time frames to trade a new strategy. You could be missing trades that would make you back those losses had you been looking at it. So it's a very, very important bad habit to avoid, because it will just keep you in this loop of inconsistency. You might then start having a good few months trading a new strategy, but eventually you're going to have drawdown, you're going to have losses. It's natural with trading. You can't win 100% of the time. And then you revert back and change strategy again. So you need to stick to your plan, make sure you execute it even throughout the drawdown periods. And if it's a profitable strategy, keep executing the trades you know you should be taking, and the edge will play out. You need a big sample size to allow your edge to play out. And if you change just because you've had a few losses in a row, you change strategy just because you've lost a couple of trades, you're not going to allow that edge to play out, and you're going to be inconsistent for the most part. The next bad habit I see all too often is emotional trading. So people reacting emotionally, entering trades that they shouldn't, that's completely not part of their plan, because maybe they've had a few losses and they see their account balance down and they're trying to get back into the market to try and make that money back, or they feel this fear and this uncertainty that, I was up and now I'm down, I need to somehow get this money back. And it might be on a subconscious level. You might not literally think, I need this money back, but you might make the decisions that you're not aware. You might convince yourself, there's a perfect trade there, I need to take that. And when you did that through because you're emotional, because you've had a few losses, and now when you reflect, you think, why did I take that trade? Like, that was so stupid. Why did I do that? So it's hard to avoid, but the way to avoid it is have tangible rules, have a plan in place, maybe on your desk, or you know your plan so well, you know exactly the times you're entering your trades, you know the areas, the levels and the areas in the market where you're executing, you know the things you want to see before executing, and maybe have a maximum daily loss of 2%, 3%, or whatever that may be, 2 losses in a row, 3 losses in a row. And then after that, you stop trading so you can be disciplined and come back fresh the next day. But what will ruin your trading results is you reacting emotionally. And like I said, I've been there. I've done that a lot, where, especially at the beginning, where I wasn't really aware of it, and I'd have a few losses and I'd see things that weren't there and try to place trades and I realized I'm only doing that because I want to get that money back. Or maybe you've had a few wins and like you've been winning 5, 6 trades in a row and you just take stupid trades because you don't really care. I'm up X amount. If this loses, I'm still up, so I'll keep taking it. But that will ruin your results too. You need to stick to your plan. Let the edge play out by being disciplined to your plan. And it's important to avoid emotional trading as best you can. Lastly is self-discipline in trading and outside of trading. So it could be people within trading, people aren't disciplined, they don't stick to their plan, they take trades that aren't there, like I say, because they're reacting emotionally, or maybe they need to wait for one more confirmation and they're worried about the trade running off without them and making money without them, so they end up taking it early, and then in hindsight they look back and say, why did I take that so soon? I could have got a better price, could have got a better risk reward. But outside of trading is just as important. For example, getting up, I saw people in the community I was in, those people that would get up literally 10 minutes before the market opened. So they just roll out of bed, they'd sit at the desk, and they're still tired, they're still half asleep, and now they're trying to make the best decisions they can. I mean, if that works for you, that works for you, but from my experience, it's best to be disciplined, get up an hour before, be fresh, be ready, be mentally in the correct headspace. But it's not just that, it's also being disciplined in maybe what you're eating, or maybe the things you tell yourself you should do, is sticking to that, because for the most part, if you can be disciplined outside of trading, it doesn't guarantee you results, but if you can be disciplined outside of trading, it's more likely those habits are going to roll over into trading, and you're going to be disciplined, sticking to your plan, doing the things you know you should be doing. If you're not disciplined, you're not doing the things you tell yourself, you're getting up later, you're eating the things you know you shouldn't, you're staying up later than what you should, then sometimes you're going to sit there, and a lot of the time you're going to make those impulsive decisions in trading, and it's going to affect your results. But I never took this one that seriously. I didn't think it was as serious when I first started, but I noticed my results improve and me to be more disciplined in trading when I was disciplined outside of trading. So I'm sure there's traders that agree or disagree, but that's just from my experience. And yeah, they're the 3 main things I'd say to avoid. So if you guys like this video, please like and subscribe. If you've got value, comment, let me know what your thoughts are. We're trying to grow the channel as best we can. We're new. We've had some good growth, so I'd appreciate if this could continue. If you guys get value, like and subscribe, I'd really appreciate it. And yeah, I'll see you guys in the next video. Thanks for watching, guys.